Welcome to All About Bankruptcy.
Welcome back to your legal path to relief with Oklahoma attorney Luke Homen. Luke is the founder of ConvenientBankruptcy.com, where he helps people erase debt, rebuild their lives with a process that's empowering, practical, and judgment-free. I'm Sophia Morales, and today's episode is Can Bankruptcy Really Wipe Out Student Loans and Taxes? Here's what you need to know. Welcome back, Luke. I'm so happy to have you with me this morning.
Thanks. It's good to be back.
So let's start with the big elephant in the room. I was in mortgage for many years, and we always knew if we sent a client out for restructuring or bankruptcy or whatever, that the taxes and the student loans weren't going anywhere. Has that changed now?
Okay, so let's start with taxes because that one's a little easier.
Okay.
It's complicated, but it's easier. All right, so it depends.
The lawyer answer.
Exactly. My staff made a sign for me that just says it depends, because that's always my answer, right? But taxes is that there's actually a rule. There's a formula, and that's the general thought that everyone thinks is just taxes, death sentence, and it's not. So first off, there are some taxes that aren't going anywhere no matter what, and the biggest category of that is what we call trust fund taxes. So that's when you're holding money that belongs to somebody else. So think of a grocery store holding sales tax money that really belonged to the customer, or an employer who's not paying the tax withholdings that their employee contributed. What the employer is doing, or the grocery store owner doing, is they're stealing money. Those are called trust fund taxes. They're not paying taxes on their own money. They're holding money that's somebody else's, and they're supposed to give it to the government. And if you don't pay those are never going away in bankruptcy.
Yeah.
Now,
Well,
in a chapter 13, you could pay them, but they're not going to be dischargeable. However, personal income taxes can be discharged in bankruptcy, but there's some criteria. So what we have is, first we want to look at, is it an old tax debt? The older the tax debt is, the easier it is to discharge. And what I mean by that is the first thing we need to look at and see is that tax debt more than 3 years old? So tax debts that are 1, 2, and 3 years old, well, you got to pay those.
Probably not going anywhere.
Or you discharge everything else and you're just left with those, and then you pay those. But we start to focus on those older taxes because let's face it, older taxes represent a time in your life that's different from what it is now, right? Harder bankruptcies are the ones where somebody used to earn a lot of money and they don't anymore. So sometimes the answer is we wait a little while because we want to look at taxes that are 3 years old. Another huge component is you need to file your taxes. So,
amen.
And that sounds simple, but it's huge. A lot of people are really worried, I can't file my taxes, I don't have the money to pay them. Well, those are two totally different things. The IRS actually have what they call penalties and interest. Penalties are a separate amount of money you get charged because you didn't even file the return. Interest is accumulating on top of the money you say you owe. So let's break this down and use some real numbers. Let's say that 3 years ago, you owed $5,000 on your taxes. If you never filed your return, you're going to be hit with penalties on top of the $5,000, and then interest, sort of like a credit card, on top of the $5,000. And so maybe it's $6,000 or $7,000 or $8,000 now. But if you filed the returns in good faith and filed a normal return and just admitted that you owed money.
Yeah, exactly. And never sent the check.
Right.
Yeah.
Then the government knows that you owe the money. They don't have to try and figure out whether you owe the money. They don't have to think maybe they're trying to run away from the debt. They just don't have the money. And go back to bankruptcy. That's what bankruptcy is really all about. Bankruptcy is all about, I know I don't have the money. I just can't pay it. I'm honest. Here's my finances. I can't pay it. So breaking that down into penalties and interest. Penalties are because you didn't file those returns. But also on top of that, if you didn't file those returns, there's a good chance you can't discharge those taxes in bankruptcy ever.
Because of the avoidance issue.
Yeah, there's actually a 10th Circuit appellate court case on point here. And what it says is if you get an automatic extension, if you don't file your taxes by April 15th, you have until October 15th. So if you filed by October 14th, October 12th, September, you're still fine. That's not who we're talking about here. But you didn't file at all during the year that you were supposed to file. Well, there's a court decision that says a late filed return is no longer a return. And so therefore it doesn't count in our dischargeability analysis.
Wow. Okay. So you don't get a do-over on that.
I think it's a bad court decision. And our state tax agency, the Oklahoma Tax Commission, isn't bound by that. And they say, well, if you filed your return late, but it's at least 2 years ago, we will still discharge those taxes. But the IRS won't, or doesn't have to. And so it's just really important. File your taxes, even if you don't have the money to pay it. File your taxes. And then if we're more than 3 years since the tax return was filed, if the IRS has had a period of time to actually collect on it. And what that means is that you weren't in tax court appealing the tax decisions. If you filed the return, you owed the tax, and then you're battling the IRS in tax court, well, then it might not be dischargeable, or you might have to wait a little bit longer. But that's not most people, right? Most people, you owe a tax debt, you didn't have the money, time passed, you still don't have the money, and now we can actually discharge those tax debts in bankruptcy. So these exceptions that we're talking about, it's really not most people. Most people file their tax returns, they try to pay, maybe they pay some of it, but then as years go by and we start talking about bankruptcy, we can actually discharge those taxes.
Awesome. That's actually good news for the majority of people, I think.
Right. But as you can get from this conversation, it's a complicated analysis, right?
Yeah.
And so the easy answer, if you Google it, is I can never get out of taxes ever, right?
Yes.
Or you call up somebody who's a part-time bankruptcy attorney, or you call up somebody who's not very good and you say, hey, can I discharge taxes? Nope. And the person answering the phone is like, no, go away. Right. So it's complicated, but it can totally be done. And we've done it at my office hundreds of times because you can, and it's awesome.
Yeah.
And it's awesome. One of those sweeteners, one of those added bonuses. Somebody comes in, they've got all this credit card debt that they're calling me for. We start talking through their situation and we say, hey, you've also got this tax lien that we can do something about.
Yeah.
Well, tax liens are different.
Oh, okay.
So
do tell.
A tax lien, and the IRS files what's called a tax lien. The Oklahoma Tax Commission files what's called a tax warrant. It's the same thing. What it is a document recorded in the land records showing your tax debt. The IRS doesn't generally do this unless the debt is tens of thousands of dollars, $50,000. That's when we tend to see a tax lien from the IRS. Now, our Oklahoma Tax Commission, they'll file a tax warrant over $200. They want their $200.
Oh my gosh, we're going to get it.
Right. So if one of those tax liens or tax warrants are filed, it actually turns the tax debt into a secured debt, not an unsecured dischargeable debt. All right, let's get complicated here. So what that means is the tax debt attaches to the property you own. So if you own a house and a car and a bunch of things, then that tax debt applies. On the other hand, sometimes we have folks that were really wealthy and now they live in mom's basement, or now they have an apartment and they don't own much. Well, that tax lien, it's only secured up to the amount of property that they own. And so we could actually potentially discharge some of it or all of it. But usually a tax lien or a tax warrant says this won't be a dischargeable debt. This is something that you'll have to pay.
So what we're talking about is something in between $200 and thousands.
Right. But again, we're coming back to that doesn't happen that often with the IRS.
Yeah, exactly.
So it's another one of those exceptions. You got to be aware of it. But for most people who come in, they've got $5,000, $10,000, even $30,000 of tax debt. And for real people, that's huge in our lives.
It is,
right?
Absolutely.
But for the IRS, who's underworked and understaffed, overworked and understaffed, for those people, then the people who owe $30,000 aren't actually at the top of the radar. You know, your IRS agents are probably focused on the folks who didn't pay hundreds of thousands of dollars of tax debt. You know, they only have so many cases that they can work. They're focused on those big players, if you will.
Right, the best return.
Those aren't generally my clients, you know.
Okay, so we went really deep into the tax debt side of things.
And that was the easier one.
I love that. Visit convenientbankruptcy.com to learn more or schedule a free consultation. Remember to like, subscribe, and share this episode with someone who needs a fresh start, and we'll see you on the next one.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.